Hey, it's Jack from Alpha Charts with the state of the market video. Today is March 4th, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. So also, if you haven't joined yet the IPO Masterclass by Trader Lion, I believe today is the fourth one. Today's fourth one. But all the original ones are all recorded. It's been absolutely amazing so far how, the people from the life cycle trade, they go through step by step how they look at a stock, evaluate where IPO is in the life cycle, and then now we're into the areas on how they actually trade the stocks. So really amazing class. If you're interested, there is going to be a link in the description down below. Click that link and it'll get you to the IPO Masterclass. All right. And again, I believe it's a 7 series class. And once you sign up, they're all recorded. Once you sign up, you get them forever. Okay. Let's get to the indexes. SPX. So again, VWAP from the peak, VWAC from the most recent bottom, and we have price literally ping-ponging right in between. Now, zooming in, the important thing is that price held where it had to, right? The 200-day and the VWAP from the bottom, price held there, and we got, a pretty decent rally off of that spot, almost 2.5%. So with that being said, we're still in no man's land, in my opinion, until we get above this VWAP again, right? And really make a higher high, right? So a lot of people got very, very bullish because you get the bounce off the 200-day, and I get it, but you have to remember that price just went from, really, if you go from here to here, just did a 6.1% move lower on the indexes, 6.2, and so it gave back, 2.8 of it, 2.68, whatever. It's like, I don't think we can say all clear yet. Positive price action. I think all clear comes up here. Right now, this is still, again, just ping-ponging back and forth. The bull case is alive though, right? Because we talked about the pullback and we talked about how this 200-day now is going to start to flatten. And as we take out all these, all this old data, and I think I adjusted this. Yeah, I did. As we do all this old data, take it all away, right? And next 2 weeks, we'll be doing even more, right? And where price ends up, this 200-day could easily be starting to turn up. Or if price gets below it, it can start to turn back down again, right? So we have a flat 200-day. That really says indecision right there, right? A flat 200-day means indecision. Again, if we get over the next week or two, we get this breakout up to 4,200. That would then have the 200-day turning up, and that's definitely the bullish scenario. On the week, it was a 1.9% gain on the week. And again, you can see on the weekly chart how beautiful this bottoming pattern potentially is, and how we're just kind of the last 2 weeks literally ping-ponging between the two VWAPs, right? So 1.9, and the RSP, let's see what that was, 1.84. So basically the same thing, and a very, very similar looking chart. Going to the daily, you can see that the 200-day is actually already starting to lift just barely. If we really squint, we could see it. And so but we're still in that no man's land chop zone, right? Between these two green areas is no man's land. But again, it was nice to see it hold where it kind of had to. And then we'll see what happens over the next week or 2 weeks, right? Which way it kind of breaks. But I do like, the 200-day is starting to move higher, right? So if we take that in and of itself, short term, there's some confusion. Longer term, we have a rising 50 and rising, starting to rise 200-day. So that's positive. That's one for the bulls, right? Here are the Qs. Again, price held where it had to. We're getting closer and closer to the 50 crossing the 200. So that is a positive. Here's VWAP from this peak, and price literally held right at the 300 spot. And again, we talked 290 to 300, and look where this went from. It went from basically 288 all the way up to 300, right? So that 290 to 300 area, which is right where the 200-day is, 50 days about to cross it. That's a big important area. It has been forever, and I think will continue to be an important area. There's your 200-day line. Again, once we get rid of this stuff, if pricing can get back above, right, we'll have a flattening to maybe rising 200-day, right? With the 50-day crossing, that would be pretty bullish. So again, a break above this VWAP. Obviously, I'd like to see an all-time a new high, relative to here. And then this is the VWAP from the all-time high, right? So let me just I like the yellow better, to be honest with you. Right there. Yeah, I like the yellow. It's just easier to see. So there's your VWAP from the all-time high, right there. And you see how it has made lower highs all along here, right? Bust out there a little bit, but really, yeah, high, lower high, lower high, lower high, lower high. So we want to see a higher high. That's what we want to see. So that's where we're at. 2.68 on the week. So strong week. Again, NASDAQ maybe playing catch up, maybe outperforming, right? Strong week. And on the equal weighted, 2.71. So about the same. So that means, that's broad, breadth, broad range, participation in the market, which is really, really good. Here's your equal weighted Qs. And you see the VWAP from the top. Price is already above it, right? So it looks a little bit different than the other one. I'm going to advance this right there, right? And you see it's already in the basing area of the equal weighted. It started basing first. And so, again, a rising 200-day. So it's hard to get crazy bearish when you're starting to get rising 200-day moving averages on some of the most important indexes out there, right? Like the equal weighted Qs. Already have the cross way back here. And again, we want to see a breakout of the $74 area, right? Price above 74. And I think we are in a beautiful bull market again, right? If we're underneath there, we're in a chop zone at this point. But again, with the 200-day that's rising now as the bottom piece of it, right? Actually, it held the 50-day, which was a beautiful thing. So again, taking just as at what it is, what we're seeing, without trying to be too biased with the macro BS that goes on out there. 200 days are flattening and starting to rise. Price has held above it. That's what we know. Those are facts, right? And so we can only go with what's facts. I know that there's the emotion of rising interest rates, dollar. We'll get to that, actually. We're going to talk about that. But right now, the facts are the 200-day held, the 50-day held, things held where they had to. Let's look at the IWM, see if it holds true for IWM. On the IWM, so it had this kind of channel, and it looked on Friday, it kind of broke the channel, right? And this was a flat 200-day. Now we're at a rising 200-day. So IWM is already, again, rising ahead of the other indexes, right? You could clearly see it right there. So that's a positive. Here's your VWAP from the top. Again, I want to see price get above that and really get above, again, there's a lower high right here. I want to see it take out this high. I think this high is now very important because it couldn't do it here. So the next move higher, I'd like to see it above 200, right? It needs to get above 200, which it couldn't do there. Psychological level as well as technically important level. But overall, I mean, everything looks really good, and I wouldn't be shocked if we see a move, higher, another 2-3%. Very, very, very possible. Again, but it's got to get above 200 for this to get real. But facts are that the 200 days rising, 50 days rising, and the short-term moving averages, as messy as they look here, another day or two of positive price action, and they will be straightened out just as easy. IWO, the small cap growth, pulled back into, again, the place that it had to hold, historically important area, and it did hold. and things are moving higher. Now, again, from the peak, which is back over here, let's just see what the VWAP looks like. All the way up here, 258, and there's room to run. That's probably the COVID low. If I had to guess, that's probably, yeah. The purple is from the COVID low, 249-ish. And so we'll see. That's the first level. That's the second level where things could go. Then there's 280 up here, right? So small cap growth looks pretty good, right? Again, rising 200-day. Love that, right? Everything is moving along the way it's supposed to be. Nothing negative has really happened at this point. IWO. I'm saying that's MDY. My favorite, mid caps. Mid caps, the strongest of the strong, and you could see it by that 200-day already with a pretty good size move higher, right? Mid caps are leading. There's nothing, it's hard to dispute this. And you just look at the 200-day moving average. There's your 50-day. Again, we want to see it break 500, right? This 500 area has been a problem. And so a breakout of 500, and this is a awesome base. It's been going on for over a year, right? Strong base. Maybe that's enough time. Again, and maybe we just get more sideways chop. That's a possibility too. And the 200-day gets even closer, right? That would frustrate the heck out of people, wouldn't it? But again, to really be in a rip-roaring bull market, I want mid caps over 500. That's the spot. But mid caps really, really strong. Small caps really strong. And then you have the SPX, and then you have the Qs. But the Qs are kind of catching up, so they may displace the SPX soon because the Qs are catching up, and it could be because technology's been doing well, and oil and gas has been kind of floundering a little bit. All right, so let's go into the ETFs. Let's see what the financials have been doing. XLF held where it had to hold, right? This was the breakout. Held where it had to hold. 200-day is moving higher, right? Sorry, it moved higher. Basing for almost a year, about 11 months. And now we're just, kind of, it's participating, right? It held right now. If we take this out and we could break below 200-day, that would make me very, very bearish, right? If this continued lower, if this was some kind of weird bear flag right there, right? And this broke down lower, then I'm going to get bearish. But right now it held where it had to. And you see where the buyer is defended right there on this day. That's facts. Rising 200-day, rising 50-day. Those are the facts. So let's look at the semiconductors, my faves. XSD, equal weighted semiconductors. I think it gives a better representation of what's going on in the index. I always use the equal weighted chart when I have that at my disposal. And you can see the 200-day is also rising very sharply. That's a huge positive, right? It's a driver in this economy. And if, price held where it had to, right, this green area, and bounced nice and sharply. On the week, it was up almost 4%. So love that. Now, if it breaks down below, 187, 188, then that's a different story. And it's got to hold above the 200, of course. But that's what I'm looking for this green area to hold, 187, 188, 50 days at 189, all that area's got to hold. And so far it is. And that's what we know as of today. It's all holding. Now during the week, more next week, we see it break down, then, we change our stance. XTN, transports. Got a little bit of a false breakdown, came back pretty hard, but 50-day held, 200-day is now flat, completely flat on transports. And we'll see, again, I drew this in last week or 2 weeks ago or something like that, right? Expecting this. I remember talking about saying this is not the time to buy any transports because it's pretty extended. Let it pull back, get the energy, and then go back. And I just drew this in, like I said, 2 weeks ago. It was pretty doggone close to what actually happened. And now if it can break out, get above 81, 82, that would be the bull case scenario, right? Transport's breaking out. That's what we want to see. And then let's look at home builders, right? Still waiting for the housing to collapse, like everyone's telling me. But as of right now, it is not. And we are looking at, this area again. It was a retest, held. 200 days moving higher already pretty strongly, and things are moving again. Boom, boom, boom. So all the sector ETFs are holding or rising already. What does that tell you? Tells you that we should, not be too worried about, as long as this area holds, the market, this is just a normal pullback so far, right? Let's look at some of the internals and see if that also corroborates what we're talking about here. Take all that stuff off, switch to line chart, and let's look at the VIX. All right, so VIX is at 18.48. So as a contrarian, especially if this goes any lower, what do we see when it gets into this area, right? Especially if we have one or two more days of green on the markets. Once it gets below 18, or even in this general range, but especially below 18 into the 17s and 16s, we see big spikes, big spike. Even in this area, pretty good size spike. I mean, we go back and look at it, and yes, it could stay back here, but there's still spikes to shake people out. So as we get into this area, I'd expect a spike, right? So again, we'll see where it holds at that point. So as a contrarian, we need to be aware of that, all right? And my dog's here, and she just heard my wife come home, and she wants to go. Let's see what the bond yields are doing. Credit spreads, IEI, HYG. Let's see. And okay, so we're seeing credit spreads tighten up and falling again, right? And again, we want to avoid things that look like this. Let me try. Yeah, here we go. Avoid things that look like this. And this looks nothing like this. You may say it kind of looks like this, right? So let's see how similar that looks, right? So you have this, then you have that, right? Then you had this, which signaled all clear, and then you had that, right? So this looks like this in a lot of ways. And that's interesting. That's really interesting, actually. We're going to keep watching this, see how similar this works. But yeah, that's really interesting. But they look exactly the same, smaller scale, but exactly the same. So again, and human emotion and this type of price movement, it repeats itself, I believe, over and over again. So we're going to watch that. Again, December was pretty good, if I remember, back in 2019. And then, obviously, COVID came out and did this. So we'll see if this follows suit. All right, let's keep going now. Next up will be breath. Breath got down to 50, kind of bounced. It has room back to the upside a little bit if we get a few more days. But again, once it gets up here, what do we normally see? Pull back, pull back, pull back, pull back. It could stay up there for a little bit, but eventually pull back, right? Up here, pull back. So if we get back up into 70, into 80 or greater, expect a pullback. All right, that's just what we need to expect. But right now, breath is okay to deteriorate some, but nothing crazy. And then we want to look at put call ratio, equity only. Kind of in between, a little bit back on the bullish side, but nothing. Again, 1 foot in the door, 1 foot out the door. So it doesn't really give me much of a signal there. We're at the dollar. So dollar and 10-year is running this market right now. So if we get further weakness in the dollar, right, we expect stocks to go up over the next few days. But if this is some kind of bull flag and we break higher, that will put pressure on stocks. And I'm expecting that to is a real possibility, and then we'll see where it goes from there. But we need to be aware that that, a falling dollar is, dollar index DXY is going to be good for stocks, and a rising dollar index is going to put pressure on stocks. And looking at the 10-year yield, we got, we were up over 4 again, back down to 3.963. Again, same idea. If this kind of falls apart here, great. I think that's a positive for stocks in general. But the rising yield, right? 10-year is going to be a problem. And I think, the bear case is we get to 5. That's the bear case. The bull case is we topped out here and this falls back down, right? Back into the 3s. So we'll see what happens. But I'm watching this again. If it maybe just retest this and then bounce higher, that would go along with the next couple days of really sucking the bulls in, and then a bear case, right? That's the bear case. So, internals right now are looking good. And I think over the next few days, we may get some more green. So, trim and trail, I guess, or trail and trim, or whatever you say. But, take something off when you can. But anyway, let's just finish this video up because my dog is starting to bark, wants to deal with my wife. But just in closing, we're in this no man's land. Yes, we can move a little bit higher, and I think there's a good chance we may or will move into that $40 and $4,090 or somewhere around there, right? There's your VWAP. I wouldn't be shocked Monday, Tuesday we get into this area, and then we gotta see. I'm sure there's all kinds of Fed speakers and economic reports coming out that could potentially move the market. But when everything is said and done, as long as price is above this 200-day moving average, and even better above the 50-day, but the 200-day is really the line in the sand. It's also where the VWAP is lining up with. As long as price is above there, right, we can't get too bearish. Price breaks this 39.40 level, that's a different story. But we have IWM and mid caps really showing a rising 200-day as well as our sector ETFs. So, and everything held where they had to, right? Last ditch efforts where they had to. If we see those levels breaking, that's time to get extremely defensive or even short. We're not there yet, right? Right now we're in that choppy, nasty no man's land. So that's what I got for you. Choppy, nasty no man's land. But we know our levels, and that's why we do this, right? We know our levels. We know what we're watching for as far as the dollar index, 10-year yields. We know what we're looking for as what the VIX could go even lower, but that's a contrarian view that could potentially, that pullback could happen. And then we watch and wait. There are easy markets and there are hard markets, right? Easy penny markets, hard penny markets. This is a hard penny market. If you're not trading well right now, that's not surprising, because this is hard to pick a direction. All right. But tomorrow I will highlight some of the best names out there if you do want to trade or trade small, to consider. Okay. So check out my stocks to watch video tomorrow. Hope you all have a great week. Take care.